Jackie
Reto de
captado en
doblar el
cámara.
rabo de Goku. Así mismo, amigos. ¡Vamos! Duro, duro, duro. ¡Oh! Va más, va más. ¿Viste? Va más. Va más que el tuyo. Duro, bro. Vamos. Ahí. ¡Oh! Va más. Ahí. Casi, 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 casi. Duro, 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 duro. Duro, duro.
Muy buena, tío. Sí, pero entonces es un huevo.
Así y doblado. Coño. Dale, dale, oro.
Increíble, bro.
Vale, vale. Tiene muchísima fuerza en el brazo. Pero muy buena, muchas gracias. Coño, se siente muy fuerte.
Buenísima.
Una lucha.
All right, hello, and welcome to Camel Finance. I'm your boy Camel, and today a shift in sentiment as of the close on Friday, right? If you've been paying attention to traditional markets, you will have seen a lot of the stocks actually starting to break out from the levels that I've been highlighting over the past week or two. This sets us up very, very nicely for some risk to come on next week for some long positions in the equity markets, which I will show you at the end as we get to the charts. And all we really need next week is to see a little bit of follow through and hopefully for Bitcoin to catch up as well. So that's what we're going to talk about today. If that sounds like something you're interested in, sit back, relax, hit that like button, and we'll get right into it. One of the speakers at the Fed has said the Fed could be in a position to pause mid to late summer. Hopping into our melt-up chart, we know that we're expecting a pause to come in the not too distant future. I think likely the 25 basis point hike we saw at the prior FOMC is likely not going to be the last one. I think we know we've got at least one or two more 25 ahead of us. But remember, it's not the hikes that are the problem, it's the uncertainty. Markets are forward looking, so as long as the Fed can do its job at letting markets know what's coming, then I think this melt-up scenario can still unfold. Also worth pointing out before we get into the rest of today's episode, look what we've got here. Breakout, retest, looking for that resumption higher. So things can change and they can change quickly. Really, we need to get above this for me to start to feel confident. But the early signs are encouraging, and that is for sure. So is this melt-up idea back on? It was never truly invalidated because we've got higher low, higher low, higher low potentially, and higher high, higher high, higher high. So that's exactly what uptrends are made of, higher highs and higher lows. We've also, like I said, breakout, retest, resumption from the 2022 bear market trend line. Things look like, to me at least, they're about to go from neutral back to melt up, back to bullish. So we'll get into the charts a bit later on. For now, I wanted to point out a couple of things. Yields and the USD are diving. Risk assets are about to rocket, and we are back to easy monetary policy. This is coming off the back of the Eurozone PPI, month over month, coming in at negative 2.8%, significantly below the forecast of minus 0.4 and the prior of 1.1%. So this is huge. Are we about to see the CPI fall off a cliff? Are we about to see inflation start to fall off a cliff? And could this be one of the things that continue to highlight we're in this Goldilocks period that I've been talking about, where we have the pendulum swing from disinflation to deflation? Remember, during this pendulum swing, there's a Goldilocks zone in the middle where everything seems like it's okay. Inflation's coming off, and we apparently are swerving a recession. We apparently have a chance at making a soft landing. So things continue to look constructive. All of the chop and volatility is, of course, keeping us on our toes. But so far, I think things are looking quite constructive. Big question here. This is the United States 2-year, a breakdown of this rising wedge. Does that mean we've seen the top in yields? And if yields can come off, you know what that means for risk, right? Risk should run very, very hard. I've also been talking on and off about sentiment being reset and flushed. And we can see here that this week's poll just recently was the most bearish it has been. So we can tick this one off. Sentiment has officially been flushed. Bears are back and they are out there gloating on Twitter and now likely about to get scorched. Another common theme we've been talking about on this channel and that is going around Twitter at the moment is that there's not enough liquidity to drive this market higher. But you can see here the liquidity gauge is going to drag the S&P 500 up. You can be short stocks all you like, but it's about to get even harder to hold those shorts. The reason for that is here is a seasonality chart, the seasonal tendency of the S&P 500. And as you can see, March through April historically has a very high probability of being extremely bullish months for the stock market. And in the history of the triple Qs, the Nasdaq leveraged. The only previous times monthly momentum completed an oversold A to B recovery was after the 2002 major low and after the 2009 major low in the S&P 500. a similar A to B move has appeared on the 2023 chart. There is a caveat here, it's only the 2nd of March. We do need to see the monthly close. The only 2 times before we've had these signals, it had occurred after we had already seen the bear market lows. Over in the world of cryptocurrency, have you noticed crypto is increasingly less correlated to the equity markets of late? Are we finally witnessing the great decoupling? I would speculate there's just a little bit of FUD and a bit of manipulation to get the price down and maybe run a few stops before Bitcoin is going to rocket higher next week. Friday saw the price of Bitcoin decline almost 5% in a single day. And here is a timeline of that crash. Coinbase had suspended Silvergate payments. The SEC says crypto exchanges are not safe. Crypto.com has also suspended Silvergate payments. FTX has confirmed almost $9 billion in missing funds. And all of this contributed to crypto losses of $200 million plus in just a few hours. This can't be a coincidence. I doubt it is. I often say this. Every dip has its narrative. Here is your narrative for this current dip. So for Bitcoin, in the month of March, there could well be some headwinds. We have this Silvergate bankruptcy looming over the space. We know that there's 137,000 Bitcoin worth billions of dollars from the Mt. Gox hack going to be released on the 10th of March. Now, we'll put a question mark here because how many times have we seen this? I've covered this a bunch of times on this channel and it just seemingly never shows up. But there's a first time for everything, right? We also have a Fed hike on the 14th of March. I would, however, speculate this could well be bullish. This could well be bullish because the market is increasingly pricing in the odds of a 50 basis point rate hike. But what if we get a 25? And what if the Fed doesn't want to change course? What if the Fed doesn't want to be seen to not sticking to the game plan? Therefore, what if the Fed does indeed hike by 25 basis points? Would that not fuel a massive upside rally in risk? I think so. There's also a Shanghai upgrade on the 14th where 17 million ETH are going to be unlocked. So there are certainly some significant headwinds for the cryptocurrency space through the month of March. But remember, ultimately, Bitcoin does not care. In other news, the SEC chair has said that crypto exchanges should not be considered safe custodians. And the reason I flag this is because this is possibly the first time in history I've ever agreed with something the SEC has said. You absolutely should not keep your cryptocurrency on exchanges. You should not consider any crypto you have on exchanges as safe. You should always store your private keys on a cold wallet. And if you ever want to get one of these directly from the manufacturer, there's always in every single one of my videos a link for Ledger and Trezor cold wallets. Do not take unnecessary risk. Use a cold wallet. It only takes 15 minutes to set up. They're simple to set up. There are instructions in the boxes. What's your excuse for keeping crypto on exchanges after everything we saw last year, all the blow-ups, all the meltdowns? Bitcoin net emissions are down for the 3rd month in a row, as you can see here. So this whole narrative of Bitcoin being bad for the environment is an absolute joke. Bitcoin continues to incentivize clean and renewable energy. It continues to stabilize energy grids, and it continues to tend towards negative carbon emissions over time. On the left, a fractal from 2019. Notice the wick before the blast off. Is that exactly what we have just performed as of last week? Do we have something like this ahead of us? And a last bit of news here for you. Spain has the most number of properties for sale except in Bitcoin and crypto. But look at these numbers. In Spain, there's 289 properties for sale where the current sellers are happy to accept Bitcoin and crypto. Thailand has 227 such properties and Portugal has 130. And so, hopping into the charts, was that a day 63 cycle low? Are we going to resolve out of here to the upside over the coming days? I will be looking for a nice strong green bullish candle, something like this that we can buy the breakout of and call this day 63 cycle low and add this long back. So this is lined up. We still have our first position with the stop moved up to this red dotted line. You can see here, if I hop into the fractal chart, we have broken away and deviated from this significantly. So can we play catch up or is something different going on here? Here's the Wyckoff schematic. You can see here, we are currently working on this sign of strength phase. So are we compressing before a blast off higher, or is this about to fail and roll over? That of course remains to be seen. Given the equity markets, which I'll just get into in a moment, you would kind of expect Bitcoin to shake off this current FUD and reverse strongly to the upside. So that is my primary expectation. And whilst we're in crypto, if I hop into the crypto equities look, you can see here, was this not breakout, retest, working on a resumption? So it hasn't done it yet. But remember, we notice that Marathon, for example, gave us an early warning sign to the downside. Marathon undercut this low back here before Bitcoin did. And I flagged this and said, I wonder if that means Marathon is going to continue to give us a little bit of alpha and provide us some leadership material for where the Bitcoin price could be going. As it stands, it's doing better to the upside than Bitcoin is, so we'll see what happens from here. The dollar is apparently still working on a breakdown retest, possible resumption lower. So is this the end of the dollar counter trend bounce? Over on the 10-year yield, big red candle. So can this follow through and break down next week? If so, expect the stock market to rally and to rally strongly. The US government 2-year yield, not quite triggered a sell side impulse on a daily closing basis yet, but it could well be on the cards next week. That's something else we'll need to keep a strong eye on. Over in the US equity markets, things continue to look constructive, don't they? I'm as sure as I can be that this is a cycle low for the S&P 500. We can likely expect another cycle to unfold between 38 and 42 days over the coming weeks. So hopefully we can do something like this, work our way up here, break out of that, and then everything should be good to go in terms of the melt up. So one day at a time, but really significant improvement technically speaking. We've also back tested this downward sloping blue bear market resistance line. This is a very encouraging sign. Here's the NASDAQ, okay? NASDAQ held this level, kind of chopped around it, now looking to break out. So I am looking for longs next week. My ideal and preferred setup would be a back test of this line followed by a resumption. So looking to get long the NASDAQ next week. The Dow Jones as well. We just about missed this stop. I've showed you this all last week, and we've now recovered this line. So can this actually do what I thought it might, which is work its way to the top of this range and break out, in which case we can add a long above here. So interesting times. Of course, this could roll over and it could roll over sharply, but for now, this looks very constructive to me. Note the Russell 2K as well, breaking out. So again, similarly with the NASDAQ, I'm looking to add on a retest resumption, preferably, or if we can just get in somewhere close to this level and see some follow through, then I'll be adding longs. The stop will have to go below these lows here. If you've been on the channel before, this should be no surprise to you. I've been calling this out for a very long time now. It is finally time to attack. We have confirmed a breakout on a daily closing basis. Notice how the VIX is all the way down on an 18 handle. Have you noticed this? So again, we've been using this VIX really well to keep us on the right side of the markets, to keep us long in the face of all of the bearish narratives out there. Hoping to pay a stop as always on this because this is our insurance and our hedge. So hopefully we can pay the stop on this and then get back to full exposure in the indexes as of next week, and things can continue to resume their uptrend. FTSE 100, we could also be adding longs back here. So we've certainly broken out of this downward sloping red resistance line. You can see we're just about recovering this upward sloping red support line here. So is this going to be a long with a stop below here? Can we actually target this 8,500 number, which I've been long suspecting we might hit? We did really well at capturing the bulk of this move, but we had to respect the risk because there was nothing to say that we wouldn't do something like this. So for now, trade is managed, but looking to get back in if we can see some follow through over the next week for the FTSE 100. Last couple of things I wanted to point out is, did you notice Tesla? Little bit of a trap, recovered back inside of this box. So all the while we're in here, this is constructive base building. If we want to see a breakout to the top side of this box, then we can add longs there. So for now, if we're going to get bullish, I'll put this here. It will look something like this, won't it? Targeting these highs up here. So this is a possible trade idea. That stop looks a bit too wide. So if we can break out over the top, I'll probably put it halfway up the box. Nothing wrong with that. And Apple did something really interesting as well. Look, break out of here, back inside of the box. So for me, this could be a trade. This could have been a long, this breakout here. But personally, I want to see this chop around a little bit inside of here and then break out above the top. That is the way to do it. That's the way the institutions add exposure during a markup campaign, using the top of these boxes. So something like this, targeting at least up here, if not higher. If we're going to get a melt up unfold, then obviously new highs is on the cards for everything. So it's certainly too early for me to be confident that the melt up is going to continue to validate. I'm very much a 1 day at a time trader. But if we can break out above the top of this box, then I don't think there's any problem with adding longs here for Apple. So called out well ahead of time. It will probably take a few days or weeks even to build a base before it goes. Failing that, if it's just going to rocket straight up here and go, then of course you can add on the breakout. Natural gas, I'm slightly worried that I left it too late to enter this trade. Maybe I should have got into this trade on this first couple of daily closes above this line. This is now moving up and it's moving up quickly. So I would like to see a pullback to this line, and if we can get that, then we can talk about entertaining longs. But if this continues to just move up higher, I think I'm going to have to let this one go, which is fine. You can't take every trade, but there's just no real clear entry for me. The only reason I've got a pitchfork on this as well as not regular trend lines is because I couldn't even fit a regular trend line. So there's some weird stuff going on with this market. As I said, if we can get a throwback to this red line that holds, then I'm more than happy to add the position there. But if this is going to continue to just keep blasting off, then I think I have to sit back and say I might have missed this trade. I keep forgetting to mention gold and silver. Gold and silver are kind of doing what I was flagging a while ago, like a week or two ago, when I was talking about what I expected to see. Now, you could have taken this trade. I certainly could have taken this trade and put a stop here, and that would have been fine. But what I kind of expected, given the steepness of this angle, is I kind of expect this to sort of do what I said originally, which is come up here and then roll over one last time. And then what we would have is a much more reasonable angle of attack. Something like this. We'll get that final flush out. And then I think when that breaks out, that's where I'd want my long to come from. So I think it would look something more like this. And then when we get my pen, and then we'll do something like this, right? That's what I think would happen for gold. So I'm hoping that this is going to roll over in the not too distant future. And if I get rid of all of the squiggles so you can see a bit clearer what's going on here. If you were to take that trade like this, then, and it was to roll over quite soon, then you haven't really got the risk reward that I like to have. So I'm not really interested in this as at the moment as a breakout. This is certainly a breakout, and silver as well is much earlier in its move. This could well be a breakout here for silver. This could well be a position for silver. But again, I kind of just expect this to waddle up a bit, roll over one last time, and then we can take the trend line to a much more reasonable angle, connect this up, and look to buy that breakout from lower down, wherever it was to form. So that's more of what I'm looking for the precious metal markets. I haven't really forgotten about them. I've just not been interested in them because I don't really foresee this bounce just blasting off to new highs. So as it stands, pretty nice closes on Friday for the US equities. We just need Bitcoin and crypto to catch up. The crypto-related equities are suggesting that we're going to see that next week. The equity markets are suggesting that we're going to see that next week, although there possibly are some headwinds for Bitcoin in the month of March. Seasonality is on our side in terms of the US equity markets. So plenty of trades called out well ahead of time, ready to attack next week. As ever, we need to stay flexible and unbiased, taking it one day at a time. I hope you have a nice weekend. I hope you're doing well in life. In the meantime, take care from me. All the best. Cheers. Bye.